I'm here with Tom Carney, the co-head of fixed income investments at Weitz Investments. Actually, the reason that I have you on the show is because of bonds. And the bond market has gotten beaten up, although it's actually recovered quite a bit since the lows.
We sit today in a cycle, in economic cycle that seems pretty long in the tooth, so to speak. And so we are not big fans of long credit. So we tend presently, you could describe us as a barbell sort of investor, where we do think duration is appropriate at certain spots, not necessarily index level appropriate, but close today. So we do that, having a barbell approach of having pretty heavy treasury exposure on the longer side, 10 plus years. But we have found dramatically interesting opportunities through the non-corporate bond market, primarily through the asset-backed securities market, specifically.
Where in the asset-backed securities market are you finding opportunities?
Well, quite a number of different places. So in that world, we've been interested in auto lending, in equipment lending, even consumer lending. But within that area, it's a massive marketplace. That these are sometimes non-public issued securities, but issued by companies that have been around for decades, whether it's auto lending, equipment lending, and maybe less so in consumer. We kind of try to live by two rules in fixed income investing. One is don't lose money, and the second one is don't forget that first rule. And there's so many ways in the asset-backed securities market to invest what we think of at the top of the capital structure, meaningfully better returns than we can get in the corporate bond market, and a pool of loans that we get to monitor on a monthly basis, not quarterly like we can with our corporate bond investments, but every month we get a peer under the hood, if you will, to see how is this pool of auto loans performing, whether it's an equipment pool of loans or even consumer loans. Not a pool of loans that changes; it's static. So we snap the line, and so we know at the issuance of these bonds what are the borrowers, if it's a consumer loan, what is the FICO base, what is the concentration if it's an equipment or auto, where are the states at, and then every month we get to monitor the progress of this pool of loans, delinquencies, certainly defaults, recoveries, and it's really been a growing area of opportunity for us.
Interestingly, you're saying that you don't see all that much in terms of defaults. Is that right on the consumer side?
No, there's certainly been, for example, in auto lending.
Yeah.
And for example, we have partnerships with a number of what people would call subprime lenders.
Yeah.
That have certainly experienced stress. That segment of the economy broadly, those consumers people would say they're always in recession, but nevertheless, we have seen some spikes, but not any above what we had kind of thought going in. When we underwrite an issue to begin with, we kind of think about what is potentially the base case, a best case, and a worst case scenario. And in no instance have we entered into any worst case scenario.